Good morning, bom dia. Thank you for your participation today. I am Cristiane Nascimento, Manager for International Efforts here at ABVCAP. Today's webinar is part of a series to discuss sustainable investing in Brazil, a movement that has gained more traction within the past years in the local private equity and venture capital asset class. And one of the main reasons is the global demand for more conscious and responsible investments. International investors are responsible for more than 60% of the committed capital in the asset class here in Brazil, a percentage that has remained steady over the years. Several private equity and venture capital funds already comply with ESG criteria and actively monitor their portfolio based on metrics that aim not only to secure financial returns, but also the impact their invested companies have on the environment and in society. Recently, big players have announced new strategies in the segment. XP Investimentos are launching two fund of funds built on ESG criteria, and BTG has structured a dedicated area for impact. Impact investing is still an emerging market in Brazil, but growing, with the strengthening of fund managers that have been pioneers in the segment, such as Vox Capital, and the entrance of new players in Brazil, and also from abroad, such as Blue Lake and Orange, which established an office here in 2019. There remains no doubt that this movement will increase rapidly in the coming years here in Brazil as society addresses the need to solve problems such as social inequality, which has been exponentiated in the crisis, and the lack of access to basic services such as health, education, and financial services. Today's webinars will address how investors are looking at the evolution of sustainable investing in Brazil, from deals to major challenges and opportunities. And we are very honored to have with us Susana Garcia-Robles, who is venture partner at CAPRIA, executive advisor at LAVCA, and also member of ABVCAP's advisory board. Prior to this, Susana was Chief Investment Officer and Gender Initiatives Coordinator at the Inter-American Development Bank, who through the formerly MIF FOMIN investment program, which she helped to build, fomented early stage and responsible investing throughout Latin America. Susana will moderate the discussion with Daniel Izzo, co-founder and executive director at Vox Capital, and Rashad Kaldany, co-founder and partner CIO at Blue Lake and Orange. We are also very happy to be hosting today's webinar in association with Apex Brazil, a ABVCAP's partner in the past 10 years. And before we get started, I'd like to encourage everyone to send your questions throughout the transmission through the Q&A button. And with that, I'd like to pass the word to Sergio Gustavo Rossi, Investment Officer at Apex Brazil.
Thank you, Cristiane, for the introduction. Can you all see my screen already?
Yes.
Okay, perfect. So first of all, I would like to thank you all that saved some time to be here with us. And I also would like to say that it's a big honor to be here alongside with such big names from this venture capital and private equity industry in a very important discussion, which is sustainable investing. I believe that now, more than ever, it's time to talk about it. So before I pass the word to Susana, I'll just make a very brief overview about the Brazilian impact ecosystem, and then I will pass the word so our colleagues can discuss more about this environment. So my name is Sergio Rossi, and I work for Apex Brazil, which is the Brazilian Trade and Investment Promotion Agency. In just a few words, Apex works in order to foster the internationalization process of Brazilian companies and also to attract foreign direct investment to Brazil. I work for the investment department, specifically working with projects regarding innovation and activities related to venture capital and private equity. We have developed several projects in order to facilitate the connection between international investors with Brazilian funds and Brazilian startups. We host one of the biggest corporate venture events in Latin America, and we just have released a new program called TechMaker to enable technological partnerships between a Brazilian company and a foreign company. And with this partnership with ABVCAP, which is mainly this first box connecting international LPs with Brazilian fund managers, we were successfully able to attract more than $17 billion to Brazilian fund managers in the past 10 years. So just before I got into the impact ecosystem, just a little bit information about the venture capital ecosystem in Brazil. Last year, Brazil corresponded for more than 50% of all deals done in Latin America. It's a big market with several opportunities, and there is a lot to explore. And it's also important to mention not only about the venture capital and private equity industry, but the companies itself. Nowadays, Brazil has 13,000 startups active working in the environment, and we also were able to deliver 13 unicorns in the past 4 years. So it's a quite new ecosystem, however, it's growing fast. So talking a little bit more now about impact, I would like to call your attention for this slide with the most invested sectors in Brazil. But this is a general slide, not only impact, all right? Why do I want to call your attention for this slide? These ones with a circle represents not only a sector, but sectors which we may have more chances to find companies which their solutions or products may be considered as impact solution. Why do I put this? I was just talking to my colleagues before this presentation, is that one of the main challenges that we have observed in our projects, in our events, is that we have several very good companies and startups with impact solutions, with sustainable solutions, but they still don't see themselves this way. So last year, we ran a study with about 1,000 impact startups, which they considered themselves as startups. And these were the most founded sectors that are being developed in Brazil. So as I just said before, this study was done with 1,000 startups, but I believe we have much more than this in our ecosystem. But because it's a whole new thing, that a whole new conversation, it's a totally a new mindset. I believe in the near future, we will have some different numbers as I'm showing right now. And as you can see, the sectors that are being developed here in Brazil, they are totally related to the ones circled in the last slide. I'm not sure how is it going to be after this year, because this year changed many things. And I believe we'll have some change in these numbers, but let's see. And again, talking about the impacts and solution is quite new. So very soon, I believe that the startups will start talking more about it. It's a totally new mindset. And regarding also not only companies, but regarding the ecosystem in general in Brazil, it's also important to mention that today Brazil has 21 active funds working in impact, according to ABVCAP. We also found out that 118 startups are fundraising, and most of them are on seed and early stage. A major part of these companies are still looking for the best possibilities to scale their solutions, their business. And this is an important step because there is plenty of ground for angel investors and venture capitalists and private equity funds to get to know these companies, their solutions, and the best way to cooperate. This is the main stage because they are developing incredible solutions. However, they need help in order so they can put their service in the whole country abroad with their solutions. And they need you guys, they need you. Because as you can see, most of these solutions, they are being self-invested, and only a very little amount of money is coming from venture capital, private equity, and corporate funds. Once again, it's a new ecosystem, and there is lots of opportunities to explore and cooperate with impact solutions. I know I'm already running out of time, so I'll go a little bit quicker in the last two slides. These are the impact sectors that were most invested in Brazil. I call your attention for the three most invested ones, which is ICT, education, and health. Even though Brazil has been developing its economy and social environment, impact investment plays a major role to democratize the access to information, technology, and health. I'm just saying these three main sectors because I don't have time, or otherwise I could talk all about the other sectors. And it's not different from what we see worldwide. As you can see, we still see health and education being among the most invested in the world. And there is just one interesting point, because even though worldwide the healthcare isn't the most invested one, but it's the one which has the most benefit people from the investments. So, and now, of course, because of the coronavirus, I strongly believe that these numbers will change, but the healthcare and financial services and education will keep playing a major role in society. I just have one final insight about this topic. This is a moment to build new mindsets. COVID-19 has shown to the world how vulnerable we are and how sustainable investments takes such important role in the world's economy and society. I was reading an article a couple of days ago from a big European investment bank. They were saying that the new generation of institutional investors are not looking to the old investing way anymore. Sustainable investment is here to stay. They want to see their money generating not only profit, but impact in the whole society. So this is a time to fund managers as well pivot their investment thesis and start including impact and sustainable solutions. Otherwise, it will get even more difficult to raise money abroad and with partners. So for now, I believe that's it. Thank you very much for being here again today. And now I would like to pass the word to Susana. Susana, you have the stage. Thank you.
Thank you, Sergio. In order to make this faster, since we are running a little bit late, just following up on what Sergio said, I would say that for me, what COVID has done is to highlight that we have to focus on investing either in fund managers or in companies that are focusing on sectors that are must-haves, all the ones pointed by Sergio, and not so much the nice to have, because Latin America and the Caribbean is a region that is mired with crisis. COVID is a crisis that has affected the whole of humanity, but we in our region, we know about crisis. We have developed that resiliency that we find in our entrepreneurs. And for me, it's one of the reasons why I'm optimistic in spite of the seriousness of the crisis, because we do have in the region a bonus in population, young population. Young people are born almost with the iPhone and the technology at their fingertips. They are born in the midst of crisis, so they are accustomed to live there. And because of these resiliencies and because they love the communities and the countries and cities where they live, they are ready to offer change and solutions through the services and products that their startups create. So with this setting the table for the discussion, I will want to start with both of you, Rashad and Danielle. You invest in resilient sectors, but what sectors have you seen or companies that have been unexpected losers in this pandemic or not so obvious winners, and what has been the differentiating factor in making them be one or the other? Danielle, can we start with you?
Sure, Susana. Thank you. It's a pleasure to be here. Thanks for everyone to setting this up and everyone to attending this. My name is Daniel. I'm a co-founder at Vox Capital. Vox Capital is Brazil's pioneer impact investing fund manager. We've been working on the field and talking about impact through investments since 2009. So a little bit over 11 years right now. And through this time, we've been investing mostly in startups using technologies to deliver solutions in healthcare, education, and access to finance. We're looking to impact investing with the lens that we should also deliver a competitive financial return. So we believe on the long run, if you invest in things that deliver basic services and have a positive impact on the lives of people, you should also have the same or even better financial returns if you do it right. Right. So we've been managing 2 funds. Right now we have close to 300 million Brazilian reais under management. Did more than 30 different equity investments. And our fund 2 is doing really well. The current IRR is exceeding 50%. And mostly due to, I'm gonna jump in to Susana's question. I'm gonna talk first about the unexpected losers. I'd say like every operations on credit, both operations on Fund 2, we have a credit company that is delivering credit on the checkouts of higher ticket goods. So default rate has increased a lot. Not so much the demand, but the default rate has increased. So we had to increase the demands or the screening process has to be tighter. So we're giving less credit, and the default rate has increased. The same on the microcredit operation we have in Fund 1, with small businesses with their doors shut, with a lot less influx of people. We had a reduce on their revenues and on the demand for credit. So operations in credit, which is very needed in Brazil for us, and they were growing really well, was not so unexpected, but clear losers there. But we think like once the crisis stops, the demand will grow and it's going to recover. I don't see a sustained reduction on the needs for credit. On the contrary, we just have to wait and see how the economy recovers, how fast they're able to get on the same pace they were coming again. When it comes to winners, now it's known. Now it's clear, it's expected, but once it happened, was quite unexpected. We did an investment on a medical devices company back in 2015, and the thesis was that there are lots of ICT beds that are unavailable based on the lack of equipment. So invested on this company that does mechanical ventilators. And all of a sudden, it's the most needed equipment in the world, a huge unmet demand. So we invested in MagnaMed, a company that is the main producer, main company providing mechanical ventilators in Brazil. We increased our production tenfold. We're delivering close to 7,000 ventilators to the Brazilian hospitals, all to the health ministries. So the company has increased the revenues by tenfold also. So it's for me, it's an ideal mix. We're helping solve an important crisis. We're helping save lives, but at the same time, by doing that, we're having like a huge result on revenues. Another, if just 1 minute more, another unexpected winner is a company on our second fund. It's an app that turns your cell phone into a banking correspondent. So I don't know if everyone knows, but between 60 to 70% of bills are paid in cash in Brazil. So people have to take public transportation, get a line on banks to pay their bills. Now they can do it on their on the corner with their small retailer. People that used to sell like bread or water, now they have an app where people can pay bills, recharge their phones with them. Just so you just for a base of comparison, they grew 40% between March and April, because two things happened. People didn't want to take public transportation anymore, or lines in banks. Bank branches were closed, and the micro entrepreneurs, they needed an additional source of revenue, so they start downloading this app more and more, and people learned they could pay their bills on the corner instead of going to the bank, spending money with public transportation. So they grew 40% between March and April, 20% to May, 20% to June, and now there are more than 6 million bills being paid through their app every month. More than 800 million Brazilian reais in turnaround per month through Sealcoin, and it's growing every month. And the crisis has made it more critical for people to have access to this kind of service.
Excellent, Daniel. Thank you for your examples. Rashad, tell us about Blue Like an Orange, and what are you seeing as winners or losers?
Well, first, thank you, and Christian, for inviting me to participate in this panel. It's a pleasure, and good morning to everyone that's joined. Let me start with just a few words about Blue Like an Orange. We were established 3 years ago with the explicit goal of providing our investors a market-based risk-adjusted return, as well as clear, demonstrable impacts on, positive impacts on society and the environment. So basically no trade-off between returns and achieving impacts. Second, we've raised over $200 million now. We had our final close for our first fund, which is focused on Latin America. We have an arrangement where we work closely with the Inter-American Development Bank's private sector arm, IDBI, your old institution, Susana. And so we present projects to each other, and then we can independently make decisions whether we co-invest. And the last thing I want to mention at the outset is the instrument we selected to provide is private credit. We used to call it mezzanine debt, but in fact it's broader than that. It's very flexible product. It's basically anything except equity, pure equity. So it's a very flexible product that many of our clients have found to be of great value. So we've made, to date, 6 investments throughout Latin America, and 2 of those have been Brazil. We had anticipated Brazil being the largest economy in the region to do up to 40% in Brazil, and we're in that about 35% of our volume is in Brazil. And we made 2 investments, one of which just about 10 days ago. My colleague, Christina Penteado, who heads up our office since a year and a half ago, led that investment. It's in the healthcare sector, so very similar to Danielle's experience. It's obvious why, but I have to commend you, Danielle. That was a great investment you made in that medical devices manufacturer. That was fantastic. Well done. On our side, it's a transitional care hospital service. It's, I think, also very good timing. And they are relatively small today, have about 100 beds. We're trying to get them up to 300-400 beds, but and very fitting for what's going on with COVID, where people are very sick. They go to hospitals, but then hopefully they recover, and then they need longer term care, transitional care, and this kind of service really fits very well. There are other types of diseases where this fits very well. It's still very small in Brazil relative to other countries, but we think it has tremendous growth potential. So that's one. The other investment we made in Brazil is an IT services company, and it too reports to us that they have not seen a big decline in demand for their services, and as you still need IT services even if you're working from From home, well, if anything, as you probably all have heard, you need even more IT services. So that's, the company is so far doing well. One loser, we had invested in Cabify, a ride-hailing company that was affected very seriously, with revenues down over 90%, but with a very, they anticipate to have a very rapid turnaround. So we're still confident they will make it through and deliver on what we originally expected, but admittedly with about a 1-year delay. Last thing I wanted to mention in this winners losers discussion is, again, very similar to what Danielle mentioned, is the fintech industry, which is just, it was already doing very well, but has blossomed with what is required, which is less human contact and working from home, wanting to shop online, etc. So we've made 2 investments. One we just signed last Friday. It was an investment in Mexico, and earlier in the year we made one in Colombia. So that's clearly a very hot area, as Sergio's presentation also mentioned. We'd love to do something in education, and hopefully in the next few months we'll find something. We're looking at one such opportunity in Brazil.
Excellent. So, you know, what I hear is what we expect and what we said. You know, these are must-haves. So they are always needed. Investments in this kind of providing access in these sectors is always needed. But many of us, CAPRIA is a fund of funds who invest in fund managers, now in our due diligence are asking you as fund managers, what has changed, if any, in your own investment thesis pre and post-COVID? Is there things that you needed to do quick adjustments because we are facing a new world, even after COVID is sort of declared gone, we know the world won't look the same. So what would be some adjustments in your thesis, or if you haven't had to make adjustments, why you feel you are okay with not making adjustments? Whoever wants to go first, go.
Would you like to go ahead, Danielle? Okay, so actually there was a trend that we observed even before COVID, and that is, as you would expect for an impact-oriented, sustainable development goals oriented fund manager, we had targeted the renewable energy space as a potentially taking up 25–30% of our investments. In practice, we found it very difficult to find investment opportunities that fit our again, risk-adjusted return expectations. And that's, I think, because there's a lot of money chasing those kinds of investments, just like we were. And I think it's also partly based on the instrument, which is mezzanine debt. Even equity investors in this space were targeting returns in the 8 to 10%, which was too low for us. So we have not been able to find, we still think we will find some, but not in the 30 to 40% that we had expected, maybe closer to 10 to 20%. The other thing, what happened is, what I already mentioned, it's more generally the tech-enabled services industry where we're seeing more and more opportunities, whereas whether it's things like health tech, ed tech, agri-tech, that there's just an incredible set of opportunities. It's not COVID related. I think it's just a trend that's just had started before, and maybe it's accelerating because of what's going on with COVID. Obviously, with online education, that's really gave a big push to ed tech and similar types of services, deliveries. I'm sure you all know delivery services have just taken off. So, you know, I think the lesson is when there are setbacks, there are always also opportunities that present themselves from these setbacks, from these crises, and that's what we're seeing.
Great. Danielle?
Pretty much the same. We see like an increasing dependency on technological solutions, so things that can that allow people to do things remotely without physical contact. So I mentioned the example of the financial services, but in Brazil we see a growing trend in health techs, especially now due to the crisis. One thing that we haven't had yet the opportunities to do telemedicine, but now the government has allowed it to happen, and we don't see this coming back. So they did a movement late last year or early this year, but like I think like 1 week after they revoked that. But since the crisis started, they let telemedicine happen, of course. So we see a growing trend. It's not effective yet, but I think like when it comes to 6 months, 1 year from now, there's going to be a boom in health techs, definitely. We know of many entrepreneurs that are starting their business or pivoting their business to take advantage of this new regulation. So we're looking more and more into health techs. Unfortunately, education, when it comes to basic education, is still not adapted to that. So but I think this will have to happen, right? So the kids in public schools right now not having classes, not having online classes. So we're still waiting for it. So not much on the investment thesis yet, but we see that this is going to be inevitable. And all in all, I think it's not on the thesis, but it's on the management guidelines. We're trying to make their capital last longer. Not there is unavailable capital. We see like there's several venture capital funds here in Brazil. They are funded. They have dry powder to invest, but mostly because we don't know yet what is going to be the effect on valuations before we go back to a new normal. Just to explain, when it comes to VC, Brazil was getting more and more mature. As Sergio mentioned, we had several unicorns. So there was clear expectations on level of development, how much money, what would be the valuation depending on the stage. We still don't know how the crisis is going to affect. So we're trying to avoid fundraising during this period. So either the companies that are growing more than expected, we're trying to make them not invest that much accordingly. And those that are affected, we had to do cuts and all, so their cash lasts longer. We see like we're trying to avoid fundraising in 2020 as a guideline for the management as a whole.
Well, and you bring up a very important point, which is, you know, we all have learned to live with less. So when we look into the startups and the scale-ups, we also can help the founders understand what today is not relevant, and maybe to direct that money to have more technology, digitalization of the company, a big issue I want to touch upon. There is a question that is asking, by how many months or years do you feel a startup's growth plans are off? And this is very important because it's the whole issue of the runway. What are you seeing? Are startups getting a runway at least of a year, or they are more in a 3 to 6 months runway that puts them in danger? This is for any of you who want to elaborate.
Why don't you go ahead, Danielle?
All right. It depends, right? So I think like I think this question it makes more sense for those that are suffering with revenues. I would say like there are companies that are anticipating their plan by 1 year based on what is happening. We have two companies like this. Magna Magi, for example, the ventilators, like it's way beyond what we could dream. So it's like a decade ahead of their plans. But we also have companies that are suffering, and for those, right? For example, for credit, I don't even consider like I won't even answer how long they're off. But the thing is like you have to be careful and be micromanaged sometimes so you can survive this, right? So the goal is more of survival than how many years you're off. So you have to make sure, and luckily we have right now the average runway that we have in cash for the companies is 12 months. Of course, we have different situations for one and the other, but I think like the ones that are doing well, they're anticipating their plans, but the ones that are doing badly, like the goal is survive. We don't even care of how many, for how much we're off, as long as we get to the end of the crisis strong enough to regain the growth.
Rashad, are you encouraging a certain, runway that they should keep watching and trying to aim at?
Right. It's very much like Danielle. It really depends on the sector and the company. I already mentioned Cabify definitely had a very big setback. And roughly speaking, they expect to be 1 year delayed. They also have focused a lot on basically controlling costs to lengthen the runway as much as possible. Luckily, they are liquid and should be able to survive and flourish once things pick up, and they are already starting to pick up. Other companies, again, I just want to cite one. This is the fintech in Colombia. That was one of 3 institutions that was selected by the government to make online payments related to stimulus package in Colombia. So the other 2 are big traditional banks. This is the only fintech company, and you can imagine the kind of exposure they benefited from. So the number of users and clients that they have has shot up and is way ahead of their expectations. So this has cut both ways depending on the sector. And you always, ultimately, the success and failure is the management. And in both dealing with setbacks and taking advantage of opportunities, best management performs well to take advantage of these opportunities when they're on upside.
I like now, because you all mentioned the need or the importance that the digitalization and the technology plays here. So do you think companies that are more traditional, if they don't go digital, will stand a chance? Or do you think this is a moment in which the opportunity created by COVID, answering one of the questions we have here, is here to stay? That from now on, we have learned that a certain level of digitalization will become a must. Rashad, why don't you start and then we give it to Tanya?
Yeah, I think it's hard to believe that digitalization is not going to have an impact on just about all industries in one way or another. I mean, even if you take something like mining, if you don't adopt technologies to improve efficiency, you're not going to be as competitive as others. So it's amazing. portable phones, mobile phones, the small corner shop is using. And so you can see it impacting just about. So in fact, I have a hard time thinking of an industry that is not in one way or another impacted. So this is definitely an area that every company, every industry has to at least reflect on. What's the potential for me to adopt and improve my operations? So that's, I would say, my short answer to that.
Daniel, you feel the same way?
Yeah, but it was a trend that was already happening, right? As Rashad mentioned in the previous answer. The crisis has sped up the process, but it was already a trend. And I see also another trend related to this panel as well. The ESG and impact we saw is as a trend as well, but it has sped up due to the crisis as well. So I think like both companies that don't adopt technology really fast and do not connect to purpose, higher purpose, or with impact, or at least ESG measures are going to suffer the same. That's the feeling that I have.
Good, and you bring up a topic that I think is important to discuss here, which is what are your strategies for securing credibility in the impact reporting that you provide? Many times, all of us who care for impact are challenged and ask, what are the metrics? How do you report? So if you two can tell us a little bit what you're looking for, considering that we have 65 participants and maybe many of them are entrepreneurs who will seek you after this panel.
We can go, yeah. So as an introduction to this answer, could be a very lengthy answer. I'll try not to.
Because we don't have much more time.
Yeah, I think it's something that has to be better developed on the whole impact ecosystem, right? And not only in terms of methodologies, but also in terms of third-party validator. To do an easy comparison, when we say impact, we're promising a twofold delivery. Like we want to deliver financial return, but we also want to deliver social impact or environmental impact. The financial return is easy, right? So you have accountants, you have methodologies, you have CFO who is easy to find, you have accountants, you have an auditing company that says that is true. For impact, you pretty much don't have much of these, right? So I think it's important for fund managers and companies to adhere to things that are becoming closer to, I would say, like closer to standards in the market. So you should relate to the SDGs. There's this impact management project that helps you create your strategy towards impact. There's IRIS that help you with metrics. It's an index. I still think we're lacking this third-party validator that looks into it, like the KPMGs or Deloitte's that would look into your impact assessment and say, like, I validate that, I say it's true, you can trust that. Because right now, to tell you the truth, and both of you know, you can pretty much say whatever you want, right? That there's no checking and balances to that. So I think there's this component that has to be developed. For ourselves, we do a theory of change when we are evaluating the business. We define indicators that we want to measure. We measure when they can, right? So you have a mindset that there's no impact in a company that doesn't exist. So first rule is survival and growth. And once you can, you start collecting the indicators that we define on the theory of change. We use the impact management project. We used to use GEARS, the Global Impact Investing Rating System. which was discontinued. So right now we're using the B impact assessment for comparison wise, and we hired a third-party validator for our B impact assessment. So we're doing an in-house, not in-house because it's a third party, but we're doing like our own validation of our metrics, the B impact assessment. That's what we're doing right now. But I think it's an item has to be improving the whole ecosystem so we get more traction and accountability overall.
Great. Rashad?
I agree with Danielle. The main point is it's still an effort in the industry that's still evolving and improving, and is essential for its long-term success. On our side, I'd like to describe what we decided to do. One is we decided to hang our hat on the helping the world achieve the Sustainable Development Goals. Now that, in some ways, is a kind of a simple way to frame it, but in others it's challenging because the SDG framework is not the most private sector friendly.
Yes.
We developed an approach that we call SDG BLAO, where we have developed a methodology to assess the impacts of the various activities of our investee companies. So we agree upfront on what we're going to try to achieve jointly, I mean the company is going to try to achieve, what they will report to us on, usually at least on an annual basis, but increasingly we're asking them to report on a quarterly basis. And then it's about what Danielle mentioned, validation and reporting that both to our investors and in some cases more openly to the world. So I agree it's still, there's various service providers are still being established and being developed, but it's increasing. There's lots of entrepreneurs around the world who have seen that there's an opportunity here. And so whether it's the IFC impact principles, the GIN, et cetera, a number of organizations, you mentioned others, Danielle. But we also feel that this is essential for the credibility of the industry and for it to continue to flourish.
Yeah, and in the end, I think all the principles are looking at core metrics. And I think maybe what we should do is to advertise those core metrics and not get lost into the myriad of other possibilities. I also think that maybe some metrics that focus too much on impact and don't give relevance to financial metrics alongside the sustainability are not doing a big favor, because it does perpetrate the idea that maybe impact doesn't give you financial returns, which of course none of us in this panel believe. Now, just going into the last section. So, you know, in your own due diligence, what do you do to assess the founder's intentionality for impact? What are the asks that you have in due diligence and for him or her to understand what will happen if they get your money? And the last one is how would you answer those who see an additional burden and cost on investing with this lens?
Okay, shall I go first this time?
Sure.
This is a very important question, but I would say it's just as relevant when you're doing an assessment of a company's prospects to make profits. And it's a very difficult thing to assess. But the obvious things are, one, you look at track record of the managers. And two, it's about also, and this is where it's the art of investing, it's about speaking to the management, the shareholders, see if they're aligned in what they're wanting to do. And I would say for us, it's also been an important element is the receptivity to wanting to learn, wanting to improve on this dimension of sustainability of impact. And so we put huge importance on what you mentioned, intentionality. It's not easy to assess, but it's critical. So, and it's related a little bit to your last point. Undoubtedly, there is a cost. Sometimes it's a big cost, sometimes it's a more modest cost, but ultimately it's about the management and the shareholders viewing that while there are costs, there are ultimately also benefits, whether sometimes and not always, but they can be translated into financial benefits. But it's also do you believe that that's what you're here to do good, not at the expense ultimately of your returns, but that you really do believe in the ultimate goal of doing good. And we have been very pleased to see how receptive companies are. And you can tell relatively quickly when people pay lip service to that. They don't really believe it. They just want to get your money. And when they really believe it, because they engage with you in a genuine way.
I see Daniel saying this.
Yeah, that was exactly my main point I was going to say. Like we're constantly assessing this during the due diligence process. One critical moment when we assess that is a workshop that we do with entrepreneurs for half a day, where we build with them the theory of change for that company. So we build the path towards impact from their products and services. And then things become really clear, right? When they're, as Rashad mentioned, just paying lip service to that, or when they are really engaged. And as though it's really hard to evaluate, and sometimes we can get it wrong for quite some time. You cannot get it wrong for that long, right? And we've talked to an excess of more than 5,000 entrepreneurs over these 11 years. So I would say, like, right now it's quite easy to spot when they don't really care about impact. They're just after your money. This help once you get an entrepreneurial intentionality. And just a note here: we only invest in companies that have an impact on their core business. So although it may increase a little bit the cost to measure that, from our point of view, impact measurement, or we don't even say impact measurement, right? We say impact management. It should increase the value of the company, or at least be used positively by the management. So when you manage an impact, when you see a measurement that is negative, for an impact that should be on the core business, it's clear that you have to improve the value proposition of your product or service. When it's good, when it's positive, you should be using this for marketing or sales or sales pitch, right? So impact management and measurement, it should enhance the core business. Should be used as an input for managerial decisions, or even for a more or stronger sales or commercial pitch in the end. So it shouldn't be, as you mentioned, Susana, we agree 100%, it shouldn't be set aside. So I manage the business here, but I have to stop to measure the impact. So the impact, once it's on the core business, it should be measured as a way of you really going towards the right direction towards your business as a whole.
Yeah, and actually, I think that it's not only something that entrepreneurs can use for their pitch, but it's also something that will make their addressable market more relevant and bigger. Because if you have a company that offers a service or a product to access any kind of basic service, can we think for a moment that is only for Brazil or another country in Latin America? What about Africa? What about any other emerging markets? And as I like to say, as an Argentinian living for over 35 years in the US, I have news for you. In the US, there are a lot of pockets that look very much like an emerging market and that can use a lot of help in accessing better basic services. So I think this is very relevant and important to our discussion to really see the mainstreaming. I don't know if you can watch, I have behind me something that says mainstreaming impact, because I think in 2020, after we are seeing not only with this pandemic, but we need to invest with a different lens. I want to make a pitch that even entrepreneurs are beginning to venture in this area. I know Adriana Mata, a Venezuelan who now lives in Chile, and her company Quantix helps other entrepreneurs or fund or asset managers to understand how to measure impact, because she saw it that is so important, but people get stuck on how to measure this. So coming to the end of our webinar, I would like each one of you to think of a final point or punchline that you want to leave the participants with.
Yeah, okay.
Go ahead, Daniel.
It was a good dynamics, right, Rashad? Thank you. Of course, I think it's happening, right? I think there's an acceleration of the theme, very much. It was a trend, but it became accelerated, as I think Sergio mentioned. Like, we haven't had any action from the large Brazilian institutions until this year. So this year, BTG launched their impact area, XP launched a sustainable wealth area, launched a fund of funds for ESG funds. I know Itaú is doing their stuff. So everyone has finally decided to join. And I think this has accelerated already a trend, and I see this as an inevitability for the future, because especially the newer generation, not only the newer generation of investors, but the newer generation of consumers and the newer generation of talents. I think it's going to be really hard for you to keep, to attract and retain the best talents of this newer generation if you don't clearly deliver a positive impact towards the world and the society as a whole. And I think that it's clear for me that this pandemic and the fragility of our systems make it even more critical. And we have now a generation that is getting to age that has never lived in a world without a crisis, right? We've been in this environmental crisis, inequality crisis for quite some time now. So these people have imbued, it's almost like a ship that they have, that they see it as a need or even more as a must. So I think due to it's starting now, and the newer generation is only going to make this grow. And my dream is that at some point we won't be saying impact investing anymore, because we will understand that every investment has an impact, and I have to care and take care of the impact of my investment. So my dream is, and this is the final message, that investing without impact is going to be as old-fashioned as, I don't know, throwing garbage on the streets or smoking on the airplane. Do you remember when we invested without thinking about the impact we were generating? I think at some point we're going to reach that. That's my, that's what I'm working for.
Excellent. Rashad?
Well, that was a hard act to follow, but I'll be very brief. I think the main thing is this can be a lot of fun. It feels good. And it's challenging, so we should recognize, as we did earlier, the challenges, but it also, it's not just a pain in the butt to do. It's not just a cost. ultimately also feels good. We can see it in our investors, whether investors in our management companies or the LPs. They're really searching for this. And when you make a good investment, like the one Danielle made, ventilators, or in our case, in transitional care, everyone feels good. So you can achieve good returns and ultimately feel good that you've had a positive impact. So it's worth going through the effort, and I agree with Danielle. This is a trend that will not be thwarted, it will only increase.
Well, thank you very much for your insights. I couldn't agree more with both of you, with Sergio and what he presented in Apex. And I want to thank all of you, and mainly ABVCAP, for giving us this space. I remember many years ago when with ABVCAP, we were trying to put this space as one more topic in the industry, and it was tough, and Danielle also remembers that. And but if you persevere, and this is a good message also for entrepreneurs and fund managers investing, we do have to be resilient. If we are convinced that there is this huge value to offer to humanity with the ideas we are going to invest in or support for them to grow, we will have to persist. We cannot be thinking of just a fad or a trend. So I want to thank ABVCAP mainly, and all of you for a very energizing panel. I know Cristiani posted the next webinars coming up, so before the webinar is turned off, look at them to make sure not to miss them. And thank you, Cristiani, for giving me the chance to moderate this great panel.
Thank you, Suzanne. Well done.
Thank you, Susana.
Bye.
Thank you.
Bye-bye.
Bye-bye.
Bye.